Real Country 1430 AM and 107.3 FM WRDN. Brian Winnikins from Commodity Classic. Thank you to our Commodity Classic sponsors, including the Wisconsin Soybean Marketing Board, Synergy Co-op, Wisconsin Farmers Union, Osteoplastics, Compeer Financial, Annabis Silo, Animal Wellness Center of Buffalo Valley, Elsivia Co-op, and the Wisconsin Corn Growers Association. Shawn Hackett joins us, and we're going to talk a little bit about markets with Shawn. We have talked with Shawn before, and Shawn, thanks for joining us. Well, I guess we'll start with, since we're at we're at Commodity Classic, we'll start with the grains here. But that WASDE report, it was kind of, at least that's how I took it.
Yeah, I don't really think much of the reaction that we're seeing now is a result of that particular report. I think it's more the fallout still of this, China-Ukraine involvement, getting this grain deal renewed. And I also think it's just worries over that outlook report that showed too many corn acres, and the worry that this extra moisture we've gotten is going to get us off to a really good start and maybe set up for a record crop this year. And so, we haven't been dealing with big crops lately, so that brings a lot of sellers in the market at a time that commodities in general have been pretty bearish.
Okay, so you throw in, we've had the sell-off here, it seems like, over the last few weeks with grains. We still have some of these higher inputs as well. So for farmers, what should they be thinking about here?
Well, I mean, certainly, there's always a mismatch, right? The best time to buy your inputs is not necessarily always the same time that the corn price is high. The way I'd be looking at it right now is, hopefully you have made some sales and you've got a lot of sales done. But to try to chase the market down and sell into a hole typically is not the best way to market your grain. We have a long way to go. We still need a big crop. Argentina's crop took a lot of the punch bowl away from South America. So, I would say stay calm, stay cautious. We still think there's a good reason why we will get a bounce here into the growing season to provide a better opportunity to maybe get that price better off relative to the inputs.
Is there some concern, Shawn, because the things you've mentioned, okay, weather, we're off to a good start. Okay, we have the geopolitical situation. But those are things that on a snap can go the other way, and now all of a sudden, if you're on the wrong side, you're in a world of hurt.
Well, think of what's happened. We've gotten all the speculators getting really, really bearish, getting really, really short, especially wheat, thinking there's no more geopolitical risk at all. And what if there is? What if something comes out and all of a sudden it is not off the table? The reversion could be as crazy as the decline has been. So you definitely have to keep that in. We are in a highly amplified volatile environment, up and down, and one should not lose sight of the fact. More of the reason, if you're a livestock producer and you're seeing some feed prices like corn getting into the zone that looks more attractive, don't look a gift horse in the mouth for too long. I would be thinking about taking advantage of this low feed price going into April, because you never know if we get that rope-a-dope you just talked about.
Talking with Shawn Hackett today from Commodity Classic. Okay, we're going to radically switch gears, obviously being in Wisconsin dairy. Boy, there's a lot of concern. I know some of the dairy analysts are saying we could see a $4 a hundredweight drop throughout the year for milk, but that's kind of a concern. What, if anything, are you seeing from the dairy side?
I'm seeing massive negative margins, especially out west. We're seeing cull cow rates very, very high. The herd is starting to shrink again. We had horrific flooding in northern New Zealand that's hurt their production. So our best case scenario is that global milk production over the next year is going to be flat at best and probably be down. So it still comes down to, will China come out of their COVID chaos and provide some support in demand for the milk market later on this year? I think that the odds are very favorable that they will. And if they do, then a lot of this depressed milk price will come back, and we'll get a better go of it later in the year.
Even with, for the U.S. milk markets, it's so, a 0.5% increase throws everything into chaos, and we've been seeing an increase at least domestically. But what you're telling me is, at least with some of this downward potential production overseas, that could help counter some of that.
Yeah, well, remember, milk is a slow-moving train. You don't stop production immediately, right? But the negative pressure we're getting on margins right now is going to impact production later in the year. And it's not unusual to make lows seasonally in the first quarter of the year during the spring flush. So we have to keep things in mind. This is not, we've seen a lot of ugly milk markets here in the first quarter, this being one of them, but I do think we're pushing too far at this point, and I do think we're going to see prices revert back to something better. Liquidating the dairy herd as aggressive as we are has always been a great leading indicator to better prices later on in the year.
And that liquidation of the dairy herd, is that going to be putting more pressure than on beef?
It certainly is going to, certainly on the low end of the beef chain, it's going to help provide some extra supply, and maybe it's the reason why the cattle market's starting to act lethargic here. It's not acting as strong to the Brazilian export restriction news or to the corn price going down. Something's holding this cattle market back. It could be all this beef coming in from the dairy herd liquidation.
Talking with Shawn Hackett today from Commodity Classic. What about hogs? I mean, man, I tell you what, it's just, you must just be singing gloom, despair, and agony on me. I mean, that's the hog market there.
Yeah, it's one of those things. The thing I think is really worrying me, we're starting to hear that African swine fever is coming back in China strongly. Hard to know what's true out of China, but if that's true, we know what that typically means. Liquidation, depressed pork prices, because everyone's going to be liquidating, trying to get ahead of the African swine fever. That might be why the market is more bearish than people might have thought, because they're worried those exports that we're supposed to be selling to them may take longer if they're in fact going through another round of ASF. That's something to pay attention to in the months ahead.
Shawn, if folks want to get a hold of you and chat about some of this, how can they do that?
Our website is Hackett, Hackett, advisors.com. We also have a Twitter page at Faradix11. You also can find us on our LinkedIn page. Oftentimes we put out some information and interviews that go over some of our work and the cycles that we follow.
Shawn Hackett, we're at Commodity Classic. I'm Brian Winnikins for WRDN.